Hello and welcome to Insurance Mantra, your weekly guide for understanding the world of insurance only on ET Now. On today's show, we turn our focus to role of India's public sector general insurers and the challenges they face while competing with private players. Can PSU companies match the discount, commission and flexibility that private insurers offer, and what reforms are needed to strengthen their position in a rapidly changing insurance market? Joining me to share his perspective is a very special guest, Sanjay Joshi, Chairman and Managing Director of Oriental Insurance. Mr. Joshi, welcome to Insurance Mantra. It's a pleasure to have you with us today.
Thanks a lot. Thanks a lot, ET Now, for calling me here and giving me this opportunity to interact with your viewers.
Okay, sir. So to begin with, sir, I will start with the GST reduction announcement only. So there are other PSU companies, they have announced that they will be passing on the complete benefit and without change in commission structure. So are you also doing the same?
Yes, we shall pass on the complete benefit of GST reduction to our customers, and we have already publicized it through our our website and social media, as well as from through our network of offices across country and through our intermediaries. If we explain it in simple terms, if the premium for a health retail product was 100 rupees, and with the service tax of 18%, if the customer was paying 118 rupees to the insurance company before 22nd September, so from that date, from the revision date or from the reduction date, the customer will be paying only 100 rupees, and this entire benefit shall be passed on to the customer, and we shall not be revising the premium rates, or we do not intend to revise or reduce the agent commission also.
Okay, sir. So you are saying that agent commission also will not be revised and complete benefit also will be given to policyholders. So that means that you will be taking hit on your P&L, and what will be the quantum of hit?
It is true that there will be an impact on our balance sheet. It may be in the range of, say, I cannot tell you very accurately, but it is expected to be in range of 80 to 100 crores. However, we have as you see, out of our more than 20,000 crore premium, 8,200 crore is coming from health portfolio, health LOB. But out of this health LOB also, the large part comes from the group health segment. And our retail health segment actually constitutes less than 10% of our overall portfolio. Hence, I think that with our other than retail health portfolio and the growth which we are experiencing, we will be able to absorb this impact in our balance sheet, and we will not be needed to revise the premium or reduce the commissions. So I think we will manage.
What should be the quantum, according to you, which is required for your company and insurance sector at large for TP rates?
Actually, you see that it has to be vehicle wise. So it depends on, actually it is an actuarially derived price. So already the GI Council has been recommending with the group of actuaries recommending the revision of price through, and it cannot be same for every vehicle segment. So segment wise, for two-wheelers, it will be a different revision. For private cars, it will be different revision. For taxis, it will be something different. For smaller commercial vehicles, for example, for school buses, I think there is a scope for even reduction of the premium. And on the other hand, in the heavier commercial vehicles, there is a need for steep rise. So nobody can specify an amount, but during a course of this of an interview like this, it is an
But
actually derived price, and a group of actuaries have already made their recommendations multiple times.
But you are saying that it's a high time that now there should be upward revision should be made, so third party portfolio remains sustainable.
Yes, yes, it is very, very pertinent so that the companies, the insurance sector maintains its sustainability and profitability. I am not saying that there will be enough, there will be margins, but actually to keep it afloat also, we need an urgent revision in motor TP.
Okay, so now from motor, I will shift to health insurance. Health insurance also premiums are rising, and affordability for common policyholders is becoming challenge. So how you are maintaining the balance in health also, and what are the steps taken by your company in a health insurance space?
See, the unregulated commercial hospitals and the spiraling medflation has resulted in a rising health insurance premium also. Rather, I will say that the premium is not growing at the same rate at which the cost of health is increasing. So there is an urgent need for bringing in some sort of regulation for the booming health sector in the country, particularly the corporate hospitals. So there is a tremendous demand for that. But on the other hand, uh, uh, the other side is also actively campaigning for against any sort of regulation. Earlier, the attempts by the government, like Clinical Establishment Act, have not proven very effective. We as PSUs have actually in past seen some success through our initiative of preferred provider networks, where with active cooperation of the hospitals, we could bring in the economies of the scale, and for a long time in various big cities, with the active cooperation of the hospitals, we have been able to keep the costs in check. And but this effort needs to be sustained, and it will be very good if some health standard health protocols are introduced, and some sort of regulation is also introduced to curb the malpractices. I'm
Okay.
not saying that every hospital indulges in that, because we have already have had very good experience in preferred provider network, and it was not possible without the cooperation of the hospitals. So through that, we have been able to sustain costs, and such good practices should be encouraged and further emulated. At the same time, there is urgent need on the part of all the insurers as well as the other stakeholders to actively work on the fraud controls, so that any leakages, if there are any, they should be stopped, and exemplary action is taken against the fraudsters who want to take advantage of such systems.
Okay, sir. So now I want to shift focus on the digital transformation. We have seen that private players are way ahead when we talk about the digital app and the digital offerings, and PSU insurance companies lack on that front. So what sort of steps Oriental has taken for the digital transformation? Because now you have to cater to millennials, Gen Z, and the new generation.
Yes, you have touched upon a very important point. It is true that the public sector insurers were slightly late in actually adopting the technology. As you know, when it is a train moving on a rail, it takes some time to change the direction. And the newcomers had this advantage of starting with the technology itself. For us, there were some legacy systems, and there was some delay. But I'm very happy to say that actually Oriental has been amongst the PSUs. Oriental has been the first mover in various ways over the years, and we are aware of the need and the urgency of the digital transformation, and I'm pleased to tell you that we have all our critical business platforms have already been moved to the cloud native and API driven systems for scalability and agility. We are also working in the direction of employing data analytics and also AI to improve underwriting and fraud analytics and claims control.
Okay,
And
sir. So my
going
final
forward,
question would be, I am running short of time, sir. A very important question, that is for youngsters. We have seen recruitments going on at LIC, New India Assurance. So any sort of recruitment plans in Oriental also, where you will be hiring specialists of various sectors?
yes. Over the years, due to heavy number of superannuations, our manpower has depleted quite a lot, and we are in urgent need of recruitment. So already we have conducted exams for recruitment of 500 assistants to actually reinforce our offices in the areas where we were facing acute shortages. Further, we have also we are also going to advertise 300 officers post as for recruitment and direct officer recruitment, and this recruitment of assistant as well as officers will continue for the next 3 years also.
Okay, so recruitment will continue at Oriental also for next 3 years. Thank you so much, Mr. Joshi, for talking to ET Now on our Insurance Mantra. Now time for a short break here on Insurance Mantra, but stay tuned. After the break, we will be joined by Parthanil Ghosh, Executive Director, HDFC Agro General Insurance, in our Expert Speak segment. Don't go anywhere. We'll be right back after the break.